Have you been curious what's going on in the Huntsville real estate market? Well, I'm here to update you on what happened in December this year. Hey guys, my name is Brandon Taylor with Capstone Realty. I'm an engineer turned real estate agent, and one of the long-term side effects of being an engineer is that I love data and I love diving into the numbers. So every month I come up here and try to look at what happened in the market and try to give you advice for buyers, sellers, and any investors looking at the market. So here we go. We're going to dive into some metrics and take a look at what they tell us. All right, so I'm going to pull up a screen capture, but I wrote this blog over on BrandonTaylorRealEstate.com. Hope you'll check it out. That way you can look at the numbers yourself and see if you see anything that I didn't, or if you just like to look at them, feel free. So here we are. Let's go. All right, so I do this every month. I look at the numbers and the data and put it in a blog so you can read through it and see what you think. All these numbers are as of either the 9th or the 11th. I did 2 different polls of data. Depending which one, some of those get updated a little bit here and there throughout the month as corrections happen or mistakes or those sorts of things. This is the downside of a database that has literally like 3,000 realtors putting data into. Sometimes there are changes after reporting, so it is what it is. I don't think they make big enough changes though that are going to change the trends. It may change the exact numbers. So there is that. So we'll start out with the bottom line up front. We are still in a strong seller's market that is constrained by a lack of inventory. We did have a seasonal slowdown in December, like we typically do. This was driven, there was a much fewer listings than in previous months, but it actually was a stronger December than I anticipated. And it was a stronger December than we've seen previously over the past several years. So it still is a very strong market. So when we're looking at any market, you look at the supply and demand and what that is doing to pricing. And we'll also talk a little bit about interest rates as well and how that impacts buying power. So that's what we're looking at. Let's go. First up, we're going to look at the supply of homes. It's a pretty straightforward metric. We just look at how many homes were on the market at the end of each month. So this month, there were 706 homes on the market at the end of December. We're using market stats, looking at the 3 years worth of data. This is down 12.1% from last month and down 33.7% from last year. So it's a pretty significant decrease in listings from last December, where we had 1,064, to today where we are at 706. What's interesting is the number of new listings coming up also. So here you can see the seasonality in listings and how there's definitely a rise and fall in how many houses come on the market each month. This is a monthly number. It's just a count on how many came on the market. So you can see there's definitely a fall, and that the low most years, the past three years for sure, has been in December. And so this year we bottomed out at 582 new listings in December. This is expected bottom out. Obviously, we don't really know. This is a 18.6% decrease from November, and it is a 22.8% increase from last December. So that's a pretty significant year-over-year increase in the amount of volume. I mentioned last month that I expected around 550 new listings based on the trends that we were seeing. So 582 is great. Getting some more listings when we're this tight is very important to keeping our market healthy. Most years there's a huge increase in listings from December to January. Makes a lot of sense why people wouldn't want to list their house in December between Thanksgiving and Christmas and maybe getting it ready for January. So that passes kind of the sniff test. The past few years it's ranged between a 26 and a 36% increase. So we're going to kind of split the difference, and I'm going to project kind of in the middle of that, 750 new listings, up from 720 last year. So I think we'll get about 750 listings. Here's the daily metrics chart. It looks at how many listings there were daily over the past several months. This is October, November, and December. If you look specifically at December down here, you can see that we were in that 21, 22 a day range early in December. After there was an increase right after Thanksgiving. We stayed right in that range until about the 11th of December, when there was kind of a beginning of the decrease, and we saw that there was a steady decrease until the end of the month when we got down to 16 per day. Not real surprising. The first couple of weeks of December, right after Thanksgiving, is pretty normal activity, and then it does kind of die down after that for the rest of the month. And you can see at the very end of the month there's a little bit of an uptick in new listings. So honestly, I was a little surprised that it didn't even slow down even more than it did. The lowest is 7-day moving average, which is just the average number of listings per day over the previous 7 days. was 9.7, and that was right at Christmas. And so that was the lowest that got. Seems like the price increases that we've seen recently have got sellers motivated to sell their homes, which is good. All right, so moving on to demand. Demand is a little more difficult to measure. It's hard to know how many people would be out there if there were an infinite number of homes. Like, you can't really have that answer. You kind of can get an idea of that for supply, but not demand. But we do have a couple of metrics we can look at. The unfortunate thing, they're useful metrics, but they're not perfect, right? Because a lot of these are lag indicators, things like closed houses and days on market for closed houses, because we're looking at something that happened maybe 45 or 60 days ago often. And so that doesn't really measure what it's like today. And so there's kind of that lag. For instance, we'll see more closings in December than January, even though there's a lot less activity in December because there was more activity in November. So that's kind of how that works. So there's a little bit of an offset there of 3 to 6 weeks or so. The first metric is closed sales. This is just a count of how many sales closed last month. We had 788 closings. This is a 20.7% increase from last year and a 15.8% increase from November. December over November tends to be a little bit higher. I think 3 of the past 4 years that's been the case, and that was the case this year. But this was the highest increase, and I think this is a good sign for demand. Because it's showing that even during a slow time of year, there is still ample demand. I think this points to there being some pent-up demand, that there are still buyers out there looking and haven't been able to find a house yet. So even if it's listed in December between Thanksgiving and Christmas, it still is getting sold. Pending sales is another good metric to look at for demand. It tells us how many houses are being put under contract during a month. And yeah, its kind of weakness is that not all of these become sales, and so one buyer can put 2 houses under contract because maybe one doesn't work out. So somewhere between 1 in 6 and 1 in 7 houses do not close that are put under contract. So that's a weakness of this metric, and you'll see that pendings are higher than closed most of the time. You'll also notice that pending definitely has a distinct seasonality to it, and so it helps us to compare year over year a little bit more there. All that said, we did end up with a increase of 18.2% increase year over year on pending sales. So that shows an increase in demand. It was a 10.4% decrease, which is expected, is in the realm of normal. Trying to look forward and use that metric, we saw that the last several months have had 7, 13, and 18% growths respectively. So we're going to kind of average that and say expect a 13% growth in January, and that puts us at about 780 pendings in January. So it'll be hard to reach that though, just because if I'm only projecting 750 listings, it's doubtful that we would have more pendings than listings for an entire month. So something has to give there. So I have 750 as my projected listings and 780 as my projected pendings. And so I wouldn't be surprised if each gives a little bit, we end up in the middle, but yeah, we'll have to look and see what happens there. So I doubt I can be right on both of those, but I'm still going to say on both. So 780 pending seems to be the trend, 750 new listings. All right, next we want to look at the daily pending numbers. We can see the trend is that there was a steady decrease in the 28-day moving average throughout basically the entire month. There was less volatility kind of at the beginning of the month, but then it seemed to kind of steady out and slow down as we got later in the month. Next, I'd like to keep everyone up to date on the mortgage rates. We have hit a new weekly low. Freddie Mac does a primary mortgage market survey every week, that does that's been gathering data since 1971, so 50 years of data. And they gather the rate. And so here we're looking at the last 5 years of information, and it shows that we are at a low. This is the lowest point for the 30-year and the 15-year fixed, as well as the ARM in history. If you look all the way back to 50 years, it's kind of crazy because no one thought 2 years ago that we would be continuing to hit all new lows at this point. But that seems to be the monetary policy du jour. So this definitely impacts your ability to buy because you can buy you can borrow more dollars and pay the same amount of interest and keep your payment the same. I do think there's been kind of an offset because we've seen such a large increase in price, where I imagine a lot of people are finding they're buying a similar house for a similar payment. They're just paying less interest and paying more for the house. But yeah, in the last 12 months, there's been a 1% decrease in mortgage rates, which over the life of the loan you find saves you a lot of money. One more indicator on demand is the median days on market. This is just saying how long something is taking to sell. We've been kind of pegged at 3 days on market since June, and it stayed there. And then we saw a little uptake here in December, all the way up to 4 days on the market. So it's still taking very short, and that's the median. There's not a significant increase or anything like that. I just think that's some fluctuation. So I see that as basically the same. That's very low, less than a week. Shows lots of demand. Finally, this is kind of the metric that we like to show as kind of an overall metric for the market. It's called absorption rate, or months of supply. It's basically saying if we took last month's inventory and sold it at last month's rate, how long would it last us? And the answer is that we have 1 month's worth of inventory countywide. And so there's a significant shortage of homes. Rule of thumb is 5 or 6 months is kind of a neutral market. Any less than that, and you're in a seller's market where they have an advantage. And any more than that, and you get into a buyer's market where buyers really do have a little bit of advantage in the negotiation. Next, I call this my Delta chart. It's just something I make. It combines the new listings and the pendings charts and just shows the difference. Positive here is saying that we're gaining inventory. Negative is saying we are losing inventory. And as a whole, over the month of December, the 28-day moving average stayed at just a little bit positive. By the end of the month, we were down to just about 1 per day. In the 28-day moving average, you can see a significant number of days that were in the red, so to speak, and the 7 and 14-day moving average dipped down to 0 or just below 0 a few more times than the 28-day. So not unexpected during December, just because of the lack of new listing inventory, but the data does confirm that. And finally, all this looking at supply and demand does make us look at the pricing chart, which is kind of the ultimate chart on what are you going to pay and what is your house worth. We've continued to see an increase in price. We saw a little bit of a stalling the last few months where it sat right at $250,000. That's kind of a psychological number, it seems like, where a lot of people are willing to either buy or sell their house at that kind of round number. So it took a few months to break over it, but then we had a big jump this month up to $259,900. It's almost a $10,000 price in the median. This is a 3.9% increase over last month and a 16.7% increase over last December for the median price point. I also did a little analysis, just took a peek at what that median house looked like, because a median, luckily, you are choosing a single data point. And so sometimes it's an average between two. This happened to be 2 specific houses, and both of them were around 2,200 square foot, 4 threes. So one sold for $250,000. A year ago. So that's $259,000 today, and I don't remember exactly the number last year. That was $229,000 last year. And so yeah, we've seen a pretty good increase there in that property value for a very similar home. Hey, so what does this mean? For buyers, I'm always asked the question, is now a good time to buy? And unfortunately, it's hard to answer that question, just black and white, yes or no. It really depends on where you think the market is going. And so I'm trying to give you information so you can decide. I think that the bullish case for a buyer, because if you can answer that it's a good time to buy, if you think Huntsville's economy is healthy, then it's going to be a good time to buy. Mortgage rates are great. If the economy stays healthy, then appreciation is expected to go up, right? So the bull case is that unemployment is low, foreclosures are low, average income, the growth of the workforce, all those things have been looking in a very positive direction. And so that's the case for the bull. The bearish case is that it's been going good for a while. There's a lot of uncertainty kind of in the global economy, and so maybe those things are reasons to not buy right now. And so you have to decide which one it is. I probably tend towards the bullish case, where I think things are going well and probably should keep going well. But there definitely is forward looking there, so who really knows, right? And also my advice is, if you are looking to buy, this is a time to be aggressive and patient. Patient in that sometimes it takes a little while to find the right house. Patient in that if there's multiple offers, unfortunately, that means there's more losers than winners in each of those situations. And we try to put you in a great position to win those, but if there's 6 offers, only 1 person can buy the house, so there's 5 people that lose. And so there's a lot of chances where it's tough to win. So you need to be patient. And then aggressive. When you get in those multiple offers, or you find one that you want to make an offer on, or even you see a house listed, you need to act quickly. We need to be... I always tell people that hours don't normally matter in real estate, but days do. So we don't have to be there by 9 a.m., but we do need to be there probably that day to look at a house. And making an offer, we don't have to make an offer in the next 20 minutes, but we probably do by the end of the day, kind of thing. So we need to be aggressive in those timelines, and then aggressive in the offers. We need to try to make as seller-friendly terms as we can. things like large down payments help, good size earnest money help that makes them feel more secure in the deal. Finally, a little optimism isn't bad either. There's about 25 houses I expect by the end of January going on the market each day. And so that's a lot of homes and that's a lot of choices. And so each day you got to look at them, see if any of them fit your criteria, and then be aggressive. And so be optimistic. It's going to come. The houses they keep coming up. They're going to keep selling. And so just waiting for year one. That's being patient and keep hopeful. Don't get down on yourself. All right, sellers, this one's pretty quick. It's a fantastic time to sell. Inventory is low. Buyer activity is high. There's lots of buyers and few sellers, not much competition. Days on market are short. It is a great time to sell a house if you've decided that that's the right move for you. So give me a call. That's what you should do. Investors, I do like working with investors. I want to be a real estate investor at some point in my life. And so I like staying close to those guys. And so what right now, the deals that seem to be working best for folks are things like fix and flips or things that require repairs and then to be rentals where you buy, renovate, and then rent it out. Those seem to be the best. And the reason is because there's a lot of money from outside of town. There's a lot of people from California and Arizona and Seattle and whatnot calling realtors like myself in Huntsville and wanting to buy property. And they want to buy things that don't require those things. And sometimes they're willing to pay more than maybe what you would want to pay to do so. And so I think doing those things that are harder to do long distance or harder to do as a passive investment is the best way to make money in this market. I do think all that outside money coming in is a good sign for Huntsville being an investable market, and that the prices compared to rents have not quite outpaced those things yet for the returns that people want in that real estate space. All right, so that's what I got as far as a market update. Sitting here January 12th, 2021. If you have any questions, feel free to put a comment down below or send me a DM, Twitter, Instagram, wherever you got. I got all the little links all over the place here. And I'd love to connect and chat. Thanks, guys. Have a great month.